This is the European edition of Breaking Banks,
the world's #1 fintech podcast and radio show.
I am Matteo Rizzi.
I am Elizabeth Kleinfeld.
I am Don Ginsel.
And together we bring you the unicorns, startups, founders, regulators, and leaders innovating the rapidly evolving financial services sector today.
A truly globalized show with some of the world's most well-known thought leaders and new voices in the fintech sector and beyond.
Join us every month as we explore what makes Europe a phenomenal proving ground for many of the fastest growing players in the world today.
Okay, let's roll.
Hey guys, welcome back to Breaking Banks Europe, episode number 270. My name is Matteo Rizzi, the executive producer of the show, and I'm here with my good friend Serena Torrielli, CEO and founder of Wealth Hype. Serena, welcome back.
Thank you very much. Good morning, everybody, and thank you for having me.
So this is going to be a heavy Italian accent episode, as you probably already figured from these couple of words. And Serena, I want to start with a short convo that we had, both of us, last time we met in Milan. And it was about the fact that, Revolut just announced that 4 million clients in Italy. We talked about this last month, during our news with Don Ginsel. But I want this to be commented by someone who lives in the Italian ecosystem, right? And, you were saying, Revolut is literally playing another game here, and all of a sudden nobody cared, and they become the fifth bank in the country, right?
Yeah, I think that in general, the trajectory of Revolut has been impressive. And in Italy, it has been particularly impressive because they declare 45 million clients worldwide. And the fact that 4 million are in Italy is incredible, particularly if you think that a very established digital player, Fineco, has 1.6 million. So I think these numbers are stunning, and also the type of growth is stunning. I think Italy is one of the fastest country for growth, and particularly in areas like investments or robo-advisor, insurance, so all the other stuff. And we used to think about Revolut like a challenger bank, but I think they succeeded where nobody else has succeeded in making money management a completely different experience, very smooth, personalized. It's something that all the other have failed, and I think they got it right.
Serena, I'm, for the few ones who don't know your background, you are a former investment banker, worked for two very big American actually banks here in Europe as an investment banker. So your background is really about wealth management, no? And as a tail sort of topic to this Revolut thing. We haven't talked about, because I just discovered it before recording this episode. Revolut is actually hiring a product manager for private banking. Can you imagine?
Yeah,
So,
it's
it's actually it's super interesting how they are about to cover. I mean, probably private banking was. Associating Revolut and private banking was actually not immediate, right? You would, because so far, most people use Revolut as the commodity card, right? So the card with a couple of €1,000 to, pay the grocery shopping, do very basic. But right now, I think they are extending their offer. Do you see them having a role in the private banking space as well?
Absolutely, because that's the way incumbents think. They sit in their comfort zone. But I think the world has changed. The use of, for example, the use of ChatGPT in Italy is very, very high, and many people are already relying on digital tool and artificial intelligence for talking about their mind, even too much, I would say. But anyway, and the part that is growing the most in Italy is the part related to investment. So I think also, we always say that the young, they have no money. But first of all, in the next few years, you are going to have this huge money transition, like passage of wealth from, the old generation to us, to the 50 something generation. And this generation, this cohort is people that are digitally savvy and I think are ready to use someone like Revolut. Also because they changed. They used to have a Lithuanian banking code. Now they have an Italian one, which makes a difference. So they get the same guarantee as all the other banks. So I think that the banking wrap is interesting. That's why also I think Scalable has made a very smart move by requesting a banking license, because I think the banking wrap is has a different type of feeling in the perception of people compared to a robo advisor, for example. A bank is a bank, so the level of regulation and the expectation of the customer changes. So I think maybe right now it's mostly like, but it's not the app anymore. It's not the app anymore. They're pushing a lot also on service like trading online. The young guys are looking to trade the crypto asset, and they offer convenience. They offer smart features. So if I were an incumbent, I would be scared.
I agree with you. I agree with you. Actually, as a as a segue, topic to this one, have you seen that Bitcoin and crypto, of course, is super trendy, even if it crashed badly. I mean, I know that you don't have a huge exposure on crypto, and neither do I. So that's why we probably sleep better at night in this type of circumstances. But also gold is becoming a sort of a way to protect your assets in differentiating your investment. How do you, and they both curiously have like maybe 20% upside this year, curiously enough, even if I just saw a graphic that whenever Bitcoin crashes, gold spikes, and vice versa for some more or less, but that's what basic demagogic graphics look like. What's your take on this as an expert?
No, I think this is a very fascinating and interesting situation, because on one side you have gold that is by definition the fiat asset. It has a 5,000 year history as a reserve asset, and on the other side you have Bitcoin that is traditionally the hope asset, so something very new and based on coding, and people are treating in their mind, they're treating them a little bit in the same way. They are both an edge for their distrust in the fiat money, in traditional finance, in the growth of debt, and that's very, very strange. Also, Bitcoin, I don't have any exposure to Bitcoin actually. But anyway, Bitcoin is becoming to behave more and more like a traditional asset, because I think which is I'm in favor of it, the fact that it has been wrapped into ETFs or regulated vehicles that can give asset to normal investor, which is good in order to avoid problems, has also changed the behavior of this asset class. So investors tend to buy both as an edge against the traditional financial asset. But at the same time, you observe that quite often all the correlation in the market are broken. So none of them is really behaving like a true hedge. So I don't know what's the hedge. Not to have any money, probably. It's very strange that gold is not risk off anymore. When the market goes up, gold goes up. Bitcoin is more, difficult to understand, but it's something that is very interesting to watch, and I think it will continue to change along the path that the exposure to Bitcoin grows.
What do you think that gold, because Bitcoin and crypto, we talk a lot about it. Since you talk a lot with investor, or at least you see a lot of simply by the nature of Well Type, the tool that you're that you're managing, right? So it helps to smartly allocate a portfolio of investments. For example, an insurance group who wants to add asset management to their products, for example, right? So you're very familiar with investor profiles, right? Investor meaning mass affluent investor profiles. Do you think that gold is more of an asset for less educated people, because everyone understands, that gold is gold, so you should buy it and keep it, and eventually, get some of your rings and laces melt and put it in a bank, or is more, let's say, as for a sophisticated investor that use this as part of her portfolio? What do you think is the profile of the gold investors that suits the most?
I think it's a little bit both. Gold is a strange asset. It's more a currency rather than an actual asset. Both, digital assets and gold are interesting in terms of diversification, even though, as I was saying, the correlation are a little bit breaking. So I think on our side, as we are, including illiquid assets like private markets, we are also working on including digital assets because they represent a reality. So in a portfolio, and diversification is and will always be a need for any type of investor. Also, gold is included for diversification purpose. You're probably gold is easier to understand, even though there's no rational, because the movement in price of gold should be driven by offer and demand, and now for both assets, the dynamics are pure speculation. There's really no link with any different type of dynamics. And on one side, the young are very keen on Bitcoin because they like the technology side, the coding side, and this idea, which I don't know if it's true anymore, of moving away from centralized authorities. It's a kind of form of rebellion, or at least used to be. And the gold is more, the middle age or over 60 type of investor is probably more inclined to get gold. But apart from that, the funny thing is that the two things are mixing.
Let's go on the completely other side, and as a professional in the asset management, you're experiencing every day how AI is transforming the way investments are proposed to people, typically from reactive to predictive. So today, AI is able to manage and to manage the assets in a portfolio in a much faster and more dynamic way. So I personally will end up maybe accusing my private banker that they can't go any way better than the market because they only follow, right? So they adjust after that. Some of the announcements of the market have been made. On the other side, I'm not sure that regulators are ready for all this AI-powered wealth management. You dealing with this every day. How do you see this evolving?
This is a very, in the wealth management, which is the market I'm working in, is a very interesting type of challenge. On one side, particularly in Europe, we have a ton of new regulation, the retail investment strategy on one side, but also the DORA, NIS on the other, which are all demanding for more transparency. And on the other side, you have this explosion of AI, which is what we use, and which has really the potential to rapidly change the sector. I will make an example. I think apparently there is a natural clash, no? On one side, more regulation, and on the other, AI, which is tend to be a black box. So most of this is very difficult to understand. I think this can have two different type of effect. On one side, people the players can be scared, and they can, AI has the potential to completely, change the sector of wealth management and rethink advice. But in terms of process, in terms of methodology, so if people are scared by the regulation, they might take like most are doing AI like a gadget, a chatbot or just a portfolio screener, which is not it's a very limited and not the most interesting application of AI. While on the other side, it can with the use of AI, and this what we are doing, you can you can use AI to embed compliance by design. It's very helpful. Recently, my partner Raffaele Zenti has just published a paper on how AI can help to build a measurable framework for the indicators requested by the retail investment strategy. And the application is one of what is called explicable AI, where we use the power of calculation to add transparency, not to hide behind it. So it's a very interesting situation, and what can look as an apparent contrast can be a synergy in a sense.
Interesting, and actually, I believe that the way we profile. Because there are two aspects, right? So there is one on the investment level, and the other on the profiling level. So AI can help make the distribution of a portfolio more reactive, better, more differentiated, and also investor can say, listen, I like whatever. I could tell technically a prompt, hey, I want to invest in sustainability, green energy, in emerging markets, and basically AI can do the rest. On the other hand, is okay, how can AI assess the risk that I am able to take, and I'm not going to scream against someone that whatever machine has proposed me was not, adapted to the type of risk that I was willing to take. Is this still a gray area, or do you think that the regulator has still work to do on this?
I think yes, but it's also depend on the type of use you are looking for. So there was a nice article, I think, on the New York Times a few weeks ago, but also in other papers, saying that about half of the suggestion given by ChatGPT on investment were wrong, which makes sense because first of all, when you talk wealth management or planning and you're talking about your risk profile characteristic, if you ask ChatGPT, this thing tends to be like a spot image of your situation. So I want to buy diversifying asset compared to, US tech stocks. okay, that's I am this age, I have this amount of money, blah blah blah. Fine, but that's today, while advice is financial advice is something that goes along over time. Your situation changes, the market changes. Also with ChatGPT, you need to be, smart about verifying the timeliness of the information, because it tends to pick old stuff and you don't realize it. So I think the the type of relationship where I see AI and financial advisor is that AI is a powerful tool that can, augment an advisor, maybe enhance his capability of handling data, of making sophisticated calculation, of keeping regulation, everything under control. But I think that is and will it's not and probably won't be a substitute for an actual investor, because of biases, because of the complexity of the activity in itself.
Interesting. And the switching to another topic, I thought that we could go on with another episode without talking stablecoin, but apparently since last podcast, there is more, as well as we were talking last time in like emerging markets, in Africa, all these small stable coin companies that were raising to be able to move money, in between African countries, where of course there is a challenge that different currencies, they all swapped against dollars, so it's very inefficient, very slow, and very costly. But right now, we can see that in Europe as well, there is, a sort of a huge battle from the Mastercard and the Coinbase of this world, that are fighting for the cross-border payment rails with two very different approach. So Mastercard and Visa are slowly investing and looking into some of these technology. And then there is Coinbase that, of course, has technically the opportunity to move money from any Coinbase clients across the globe instantly through their platform. So it's a completely different philosophy. How do you see this battle going on? And if you had a crystal ball, who do you think will win it?
I think that probably I'm not an expert, but I think that probably also when we are talking Europe, we always have to keep in mind regulation, because as people say, the US is at the forefront of innovation, Europe is at the forefront of regulation. But I think this there's little doubt about the efficiency and the change that crypto rails are introducing. No, so it's something there's no way back around it. Probably the situation will be something in the mix, because this efficiency and convenience is something that is not really perceived by the end player. So it's something that people don't see. And on the other side, this huge operator like Mastercard or Visa have the trust, the compliance layer. So I think the situation, the winner will be whoever successfully master the mix of trust and efficiency. So it might well end up that the Visa will be the provider of a compliance layer, and these new players will be the provider of the more efficient technology. So it will be a mix.
Yeah, I tend to agree with you in the sense that I don't see, even in this generation at least, I don't see enough critical mass of even financial education and the propensity, to to use exclusively like a crypto rails. At the same time, clearly, the current system has its limits. Often in Europe, we don't see them, right? Because we are in the SEPA, very not only regulated, but in a kind of very efficient, global instant payments type of environment. But as soon as we are talking about two different currencies from point A to point B, as well as we are even like a GBP to euro, without going, very, very far. The problem of getting instant availability of the money, it is actually the issue. And I don't think that the winner or there won't be the one sort of entity will take it all. At the same time, when you look at the pace at which stablecoin transactions are growing, and even Swift, we talked about it in the last podcast. They announced an additional layer to deal with digital assets. So it is clear that traditional banks are looking very closely at the topic, don't you think?
Yes, but as you said at the beginning, the difficult thing is that in Europe, at least for me as a consumer, this is not my primary need. In Europe, payments and conversion of money are already working efficiently enough. It's a battle about who's making money, who's taking this commission, and I don't care. It's not me. I don't care at all. The level of service I have is already satisfying. If I have to complain about something, it wouldn't be about the speed at which I can transfer money in Europe. While in other countries like Africa or less developed countries, this is a real battle, and probably the adoption will be even faster and more massive. So that's my point of view.
And I wanted to sort of talk about the last topic, because you are someone who, if I am in financial services on the, let's say, startup investment side for the past 25 years, so you have spent roughly the same amount of time, but with a huge focus on wealth management. And the question I want to ask is, it looks like, but maybe I'm wrong, that the way political events today are potentially influencing asset management is unprecedented, right? Because we never had so many availability of in terms of array of investment possibilities. And on the other side, such a complex geopolitical environment, which is truly global, right? From the Middle East to the US to Europe, there is almost no part of the world where geopolitical events cannot influence economics, which has always been true, but the tensions are making it more challenging. So when you look at it, in terms of the past 3 to 5 years, is almost scaring because you see big waves in short amount of time, right? But when you look at it into a 20, 30, 50 years perspective, it still grow. And sometimes every time there is a crisis like this, I said, my God, this might be this last one before everything implodes, and the national debts will overcome economic stability and everything will crash. But please give us a little bit of an optimistic message from someone who have seen it during the course of the past 30 years of investment history.
Well, I think the behavior of the market in the last few months or years has been, giving a lot of reason for being optimistic, because the market seems to completely disregard the geopolitical tension. The only spike has been, the Trump announcements on tariffs, but apart from that, I think the market periodically have crisis, but I think more than from something geopolitical or the explosion of debt. We are seeing the situation now in Europe, in France, the crisis. I think I expect more, with Jimmy Dimon and the number of players saying the market is too high. The problems for the market will come from inside, probably from the leveraging credit, from the regulation of US bank, or from the crypto world. I expect something, but we probably, because markets need to will continue to go up and down, but I don't expect a structural, repricing of the market. The market has become bigger, more liquid, even too liquid, because of the ETF, the passive markets. So I expect a normal type of correction that will happen, but at the same time, there are so many, interesting challenges ahead that I don't see a reason why, and so much money around in the world that is slow, probably slower than in the past, but is still becoming richer. And there's so many achievements and important things to do that the market will continue to grow and will rebound. Think about the challenge in the energy of the future. There's many important things, and in biotechnology, and all this explosion in AI, and are probably not making money in itself, but they empower a huge revolution, a huge advancement that, in my mind, that I'm a very optimistic person, will positively impact the world. So I really don't want to believe that we are so stupid that we want to come back in a war. And this situation, we have already seen too many wars in the past 10 years compared to the past, and I don't think we want more.
At this, I mean, personally, one of the things that I want to say worries me the most, but it is more like I cannot comprehend, is when you look at AI, it is almost like if we added this, we saw some crazy valuation in the past. Only right now we added the zero. So anything that was already very big and seems super influential on a 50 to 500 million range, now we added a zero, and all of a sudden it is into 500 to 5 billion. And the investment in this new technologies, it is almost like also the venture capital investment added a zero. Now, is this sustainable? We in the past 20 years of fintech, almost, we mostly heard the stories about the unicorns, the Satispay, the Revolut, the Wise, the people who made it, right? And from time to time only, you see the money that gets lost from venture capital, specifically, that was put into the startups that didn't make it. My worry is if we keep adding zeros in the amount of money we pour into these very highly risky startups and new ventures, do you think that the repercussions on the real market will also be higher? Or this is like money that is almost like in an island, is from people who made money before, and is like not really influencing the Matteo and Serena buying ETFs every day?
I think, I think a little bit like the second one. I wouldn't put any huge amount of money in a new AI, particularly generalistic AI venture, because the entry barrier are so high. The situation to me is that the AI market is already there. It's already, and the smart thing about is probably dangerous to some extent, but is very smart on the other. You don't have AI player, you have an AI ecosystem where OpenAI is linked to Microsoft, which is linked to AMD, and it's, Jensen Huang, that in my mind is a genius, has been, powering his future revenues himself by investing 100 billion in OpenAI. So these big players, and some of them are not really startup, are like Microsoft, Nvidia, they're incumbent. I think they've been quite smart in creating this huge AI ecosystem that is not very, nice in terms of competition because it's not very accessible, but at the same time has been given them some type of safety. So I personally don't, apart from I don't remember the name of a Chinese player. I think China will have its own AI ecosystem. I don't see much room right now for new generic AI player that can come up with the new smartest algorithm. The number of people, the advantage that the first mover that is ChatGPT got by having everybody using its own system in terms of learning is, making the gap to feel huge. Compared to Anthropic, compared to the others. So I think the challenge for the AI right now is finding intelligent application like verticals or nice application of something that is already a commodity. And the other angle to think about, once again, which is true also for cryptocurrency, is energy. And the consumption of energy is dramatically linked to the future of AI and crypto. So it's an interesting type of investment cycle. You not necessarily invest in AI, but you end up investing in in energy, or it's very. I don't see
Serena,
much room for startups.
yeah. It's my venture capitalist mindset that keep them calling startup because they need growing capital. But indeed, you can't really call any of these giants startups anymore, even if they behave as such. Because I think I read it yesterday that Sam Altman has, I believe, 5 years. To makes the revenue times 100, and that's why he raised so much money. But even the scale at which is supposed to grow is out of this world. Anyway, we'll keep following this. Serena, thank you very much for being with us.
Thank you to you. It has been a pleasure.
It's a pleasure always. And guys, this is episode 270, and it's a wrap.
Thank you for listening to Breaking Banks Europe,
a Provoke Media podcast in cooperation with timepledge.org.
Don't forget to shout us out on your favorite streaming platform, any social media channels, Medium, or YouTube at Breaking Banks Europe.
If there is something or someone you'd like to hear in our cast, let us know.
See you next month on Breaking Banks Europe.